Sometimes while researching stocks, I see that a certain stock is getting ready to move up. And so instinctively, my first thought is to sell a covered call. But if I don't already have the stock in my portfolio, then I'm out of luck, right? Because in order to sell a covered call, I need to own the shares first. If this is your first time to my channel, welcome to Simple Option Trading. I'm Jim Ray, and I help investors that are new to options understand how to do simple stock option trading so that they can generate an income on a weekly and monthly basis while working from home. Now, one way around the restriction of having to own the shares before I sell a covered call is to use a poor man's covered call technique, which I'll discuss in a future video. Another choice, if I have the funds, is to use a rapid cover call technique. So I'm going to discuss what is a rapid cover call, what's the strategy for using a rapid cover call, and then I'll back that up with a real-world example of me using this rapid cover call technique. And then at the end, I'll show you a profit and loss analysis for using a rapid cover call. Get my free course where I show how I generated income using covered calls. Just visit my website, coveredcallincomegeneration.com. Okay, to start it off, let's first figure out what is a rapid covered call. Well, a rapid covered call is where a trader performs two consecutive activities. First, the trader purchases enough shares to cover a call option. Remember that every option requires 100 shares of the underlying stock. After step one is completed, the trader immediately uses those shares as collateral and sells a covered call option. These two activities, when performed in succession, are known as a rapid covered call. You may sometimes also hear this referred to as an instant cover call or a buy right option. Next, let's talk about the strategy behind a rapid cover call. First, we need to consider why would you ever use a rapid cover call strategy. The first reason is because during your research, you've identified a stock that's in an oversold condition. The high volume of selling the shares has driven the price down. So I like to see the share price at a major support level or just recently rebounding from a support level. Next, if we're going to be executing a rapid cover call strategy, then we need to be okay with owning the shares of stock. This requires performing the due diligence on the company, its fundamentals, their future growth potential, plus examining the charts and foresee the share price rising. Now that we know the why of performing a rapid cover call, let's take a look at how you actually execute it. The first step is to purchase sufficient shares to be used as collateral for the call option. Remember that it takes 100 shares to be used as the underlying stock for the call option. 2 option contracts would require 200 shares, and so on. And if you have some shares in your portfolio, for example 75, which is not enough for an option contract, you would simply purchase 25 more shares to give you the 100 needed. For step number 2, after acquiring the shares needed for the option contract, the trader would immediately sell a covered call option. The goal here is to sell the covered call quickly so that the market price for the shares doesn't have too much time to fluctuate. With a little luck, good market conditions, and fair pricing, a buyer will quickly purchase the option and the trader selling the option will get paid the premium. Now we're ready to take a look at a real-world example where I execute the rapid cover call strategy. For this example, I'm going to be using shares of a company called Ocugen Incorporated, whose ticker symbol is OCGN. So I think that the shares for this company are in an oversold condition and the price is relatively low. And I anticipate that the share price will start climbing higher. After researching this company, I like what they're doing and I think that the future looks good for them. So I'd be okay with owning shares of this company stock. And since I don't have any, I'll need to purchase 100 shares in order to execute this rapid cover call strategy. I activated the trading app on my smartphone so that I can submit my limit order to purchase the 100 shares I need. I push trade, and then I press buy. Next, I specify a limit order because I only want to pay a specific price for the shares, which is $7.20 per share. Next, I specify that I want the trade to occur during normal trading hours, and that this order is only good until closing. Next, I specify that I want to buy 100 shares, and now I'll review my order. So I'm placing a good for the day limit order to buy 100 shares of OCGN with a limit price of $7.20 per share. This order looks good, so I submit it, and my order gets received, and then it's placed in the open market available for anyone willing to sell me their shares at this price. Then, a short while later, my order to buy the shares at $7.20 per share gets filled, and now I own 100 shares of OCGN, for which I paid a total of $720. Here's the share purchase transaction confirmation record for my account history. You can see it's for symbol OCGN. I submitted the order on September 9th, 2021 to purchase 100 shares, and this order was filled at 6:45 a.m. Pacific time. Now, at the time of the purchase, I paid $7.20 per share. So for the 100 shares that I purchased, I paid a total of $720. After successfully completing the limit order to buy 100 shares of OCGN, I've now completed step number 1. And now it's time to move on to the next step and immediately sell a covered call option. So now that I have the 100 shares in my portfolio, it's time to turn around and sell that covered call. So using the trading app on my smartphone, I take a look at the shares and I begin the process by pressing trade and then trade options. Next, I select the expiration date of September 17th of 2021. So based on the charts and where I think this stock price might be on September 17th, I'm going to be selecting the strike price of $7.50, which at the time of this recording is paying 38 cents per share in premium. Because I own 100 shares, I'm going to specify one option contract. And for the limit price, I want to receive 40 cents per share in premium. Let's review and verify this order. So I'm agreeing to sell 100 shares of OCGN at $7.50 per share on or before September 17th. Now I'm using my 100 shares of OCGN that I just purchased as my collateral, and this order looks good, so I'm going to submit it. My order will get received and then placed in the open marketplace and made available for any buyer that wants to purchase this option contract from me. Now let's take a look inside my account history so that we can view the transaction confirmation where I sold the covered call. So I submitted this order on September 9th of 2021, and it was filled that morning at 6:58 a.m. Pacific time. So the premium I got paid was 40 cents per share, and when this option contract got filled, I received a credit of $40 as the premium that was paid into my account. So by selling the covered call option and having that order filled, I've just successfully completed step number 2 of the rapid covered call strategy. Now that I've completed both steps of the rapid covered call strategy, let's take a look at my analysis numbers. While researching stocks, I noticed that ticker symbol OCGN had some potential for selling a covered call option. However, I didn't own any shares at the time, so rather than miss the opportunity, I decided to use a rapid covered call strategy. So first, I purchased 100 shares of OCGN using a limit buy order. As you saw in my example, I acquired those shares at a cost of $7.20 per share. And now that I own the shares, I was able to sell a covered call option. So let's take a look at these numbers. So I wanted to sell a covered call option with an expiration date of September 17th, using a strike price of $7.50 and a premium of 40 cents per share. Now, as you remember, my cost basis for acquiring the 100 shares of OCGN was $7.20 per share. So immediately after acquiring the shares, I sold a covered call, and the market price at that time was also $7.20 per share. By choosing the September 17th expiration date, that made the length of this covered call option contract 8 days. With a strike price of $7.50 and my cost basis at $7.20, if this option actually gets exercised and my shares get sold and assigned to the buyer, I'll receive a profit from the price appreciation of 30 cents per share. Now, when this option contract got filled and purchased by the buyer, I received a credit for the premium being paid to me of $40, which was deposited into my trading account when this option contract got filled. Now, on the expiration date, September 17th, if the market price is above my strike price, this option contract will get exercised and the shares that I purchased will now be assigned to the buyer. And so I'll receive a payment of $750 for my shares, and my net profit from the share price appreciation plus the premium money that I was paid will be $70. And so for this rapid cover call strategy transaction, I'll walk away with a 9.72% gain in a period of only 8 days. If there's enough interest and the video receives 1,000 likes or more, I'll post an update after the expiration date and provide a status of how this whole transaction ended. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and/or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.